Welcome to the latest update from the Western Producer Markets Desk. I'm Phil Franz-Warkentin, and I'm joined today by Jerry Klassen of Resilient Capital. Welcome here, Jerry.
Thanks, Phil.
So crude oil futures, they've dropped by about $15 a barrel since we last spoke in early June, and they're down nearly $30 from their mid-May high. Can you explain a bit how crude oil price direction is influencing the canola markets these days in Western Canada?
Yeah, that's a good place to start. On June 14th, the U.S. and Iran agreed to a memorandum of understanding for a 60-day interim peace agreement. This 60-day period was to negotiate a final peace deal and officially open the Strait of Hormuz to global shipping. Apparently, President Trump signed a copy of this agreement on Thursday morning in France, and it was then signed by the Iranian president. So this is important for two reasons, because the U.S. is going to lift sanctions on Iran and allow Iran to export oil. And then secondly, as I mentioned, the Strait of Hormuz is going to resume normal trade flows. So the crude oil market will be flooded over the next 90 to 120 days. Now, soybean oil and the vegetable oil markets in general are highly correlated due to the energy component in vegetable oil demand. Earlier in mid-May, when crude oil was at the highs, the managed money was long crude oil, and they had a record long in the commodities, a combined total, a record long. So now we're starting to see this speculative money liquidate their long position in the crude oil as this agreement, comes to fruition. If everything goes as planned, we're going to see continued selling in the crude oil market. They're also liquidating their long position in the canola, the soybeans, and the soybean oil.
Okay, so bearish for commodities overall, but are farmers actively selling canola these days? And how's the demand shaping up heading into the summer months?
Well, the latest Grain Commission data shows that for the week ending June 7th, farmer deliveries into the elevator system were about 540,000 tons. This is up from the previous week from around 400,000 tons. So you can see that Canadian farmers are opening the bins. I mean, the crop is coming up with no real weather issues, and so they're anticipating a large crop. Now, when farmers are delivering, at this capacity for the month of July, we're expecting farmer deliveries to, reach about 2.5 million tons. So this is almost, getting up to harvest level type of deliveries. Now, as far as demand is concerned, it's important that farmers realize that domestic crushers take their downtime for upgrades and maintenance during the summer. And so we're seeing a period of seasonally high deliveries and a period of seasonal low demand. Many traders on the export desks also take their holidays. So it's a very slow period. And, major importers of canola, they see this upcoming crop with no weather issues. They're waiting for lower prices.
Okay, anything else, any other factors that might be influencing canola right now as far as production or anything else?
Well, Statistics Canada will release their June acreage survey on June 30th. Now, when I talk to the trade, it appears that grain companies are anticipating about 23 million acres of canola, which is a record. This would be up about 6% from last year. Now, in addition to the larger acreage, when I look at the weather forecasts, when I look at specific locations in Saskatchewan and Alberta, the main regions, the temperatures will drop to below the main critical level of 17 degrees Celsius overnight. So when that plant has time to cool off for about 6 hours, we see enhanced yield potential. And so it looks like we have a 6% increase in yields, in acreage, and there is potential for record yields because we have absolutely perfect conditions for the canola crop.
Okay, so watch the weather and whatnot over the next few months. So also I want to look a bit at wheat while I have you here. The wheat markets, they had seen a bit of a bounce the past few days, but they're all down again today on Thursday. What are we seeing in the wheat market right now?
You know, the managed money had a large short position in Chicago wheat. With some of the weather issues developing in the southern states and the southern plains, it caused them to maybe short cover their positions here over the last couple days, or should I say earlier in the week. But it's important that farmers remember that, the U.S. winter wheat farmer, he sells about 50% of his wheat in the summer months. And then as we go into July, the European farmers, they're going to start harvest as well, have their main harvest, and they sell about 30 to 40% of their wheat crop, at harvest or shortly after. Now, after the European harvest, we have the Russian harvest, and it's the same story. They sell a large portion of their crop, at harvest or shortly after. So the world is awash with wheat here till about, mid-September. Now, in Western Canada, we're looking for above average yields on the spring wheat. Similar to the canola situation, we have adequate moisture, and with the cooler conditions, it looks like we could have, record yields for the spring wheat crop. So we're factoring in a wheat crop now, when I talk to traders, of, almost 29, maybe some are up to 30 million tons, which is the same or slightly higher than last year. And so right now, the world, we're awash with wheat here till, mid-September at least.
Okay. Certainly a lot to keep an eye on over the next few weeks. So thanks again for your insight, Jerry, and thank you all for joining us at the Western Producer Markets Desk.